Hi there, you're watching Your Trades with me, Shreyansi Singh, and over the next half an hour, I'll help you make sense of the day gone by in trade and what a day it was. When we take a look at the Nifty, it was quite a good start coming in to the first trading day of the year then, because, the Santa may have skipped down in December, but January did start on a rather promising note. So when you take a look at the Nifty, 23,740 levels is what you're looking at largely for the Nifty. When you take a look at the list of sectors as well, a whole host of sectors clutching on to that shade of green: auto, media, energy, consumption, finance, making it to that particular list that I just talked about. And in terms of the key gainers per sectors, you did also have even infra or even FMCG also making it to that particular list. And pharma, that got a shot in the arm in 2024 also, was still clutching on to some of those gains and holding on to that 0.2% uptick coming in as far as pharma is concerned. On the flip side, though, you do have metal as well as realty. At least on a sectoral basis, those were the two sectors that were lagging behind in trade, but not by much, marginally so, at least for the metal space. And when you take a look at the realty space as well, just a 1.1% cut coming in on a sectoral basis for that particular sector. When you take a look at a whole host of other counters that were in focus today in terms of the insurance companies, there's a big news flow that we had coming in there as well, because commercial property insurance is going to get dearer. That is an exclusive that we got for you as well. And the hike that you're looking at, the quantum of that hike is up to 80% starting today. So that's an important update that we got for you as well. Quickly, let's mark a few more counters: IREDA, Coal India, as well as ITC and L&T. So firstly, when you take a look at IREDA, that is the one to look at on the back of that Q3 loan disbursement number, where we've seen an uptick of 41% coming in. So a stellar uptick coming in there as well. And when you take a look at the stock as well, holding on, went home in fact with gains of about 3% thereabout, and currently that's the move that you saw coming in, at least as far as IREDA is concerned. When you take a look at Coal India as well and L&T, those were also counters that were holding on to that tinge of green as well, including ITC. Now, Coal India, of course, achieved 65% of its financial year 25 production guidance in the first 9 months of the financial year as well. And on the back of that, you did have that counter buzzing away in trade as well. And it was a demerger that went through when it comes to ITC. On the back of that particular counter was also buzzing away in trade, went home slightly flat, but still holding on to that tinge of green. And through the day, it was clutching on to that tinge of green as far as that particular stock is concerned. Lastly, let's also take a look at L&T, because that's the one that went home with gains of just about 2% coming in. Rub-off impact is something that we saw coming in, because you do have the government doubling down on its defense budget as well as the kind of production target that they've mapped out, which is 3 lakh crore production target by 2029. On the back of that, you do have L&T that went home with gains of just about 1.6%. Lastly, a couple of more sectors to mark, because when you take a look at the fertilizer pack, that was buzzing away in trade, be it the national fertilizer stock, 3% uptick coming in for that one. Deepak Fertilizers as well, 1.7% uptick coming in there as well, because you did have the Union Cabinet that approved higher subsidy. The quantum of that particular hike is 175 rupees per bag. On the back of that, a whole host of those fertilizer counters were buzzing away. And speaking of buzzing away, Motown was not untouched by that particular phenomenon, because when you take a look at M&M, that is the one that was in the fast lane on the back of December auto sales numbers beating estimates. And on the flip side, there's also a Bajaj Auto that went home clutching on to that shade of red as well, because that's the one that had a number that they've reported in terms of the December auto sales that was below the expectations as well. And on the back of that, you did have Bajaj Auto that was sulking away in trade as well. But largely, that's the kind of handover that we have. So all in all, a good start to the trading year as well. And with that, let's also take the conversation then forward with Ruchit Jain and get in his take then coming in on the kind of day that we had. Ruchit, good morning, good evening. In fact, I just wanted to get your take very quickly on what you make of the market setup today, because, you did have certain select sectors, the likes of pharma, still holding on to that shade of green. You did have quite a lot of sectors in the green, so quite a good start coming in.
Yeah, hi, very good evening. Definitely a good start for the markets, post the recent corrective phase that we have seen. But what we have seen, if you look at the data, then this recent correction has mainly been because of short positions formations by FIIs. they are around 14%. They have around 14% long short ratio, which historically is seen as very low. And whenever the ratio comes in the range of 10 to 15%, I think the space to form fresh new short reduces over there. And we generally witness short covering move from such low ratios. So I think that's the sign that markets may see some pullback move or a breather move in the near term. 23,500 to 24,000. No, this is the trading range that we are witnessing since last 7 to 8 trading sessions. And once we get a breakout about 24,000, I think we should see some good momentum on the positive side in the indices. It would be too early to say that bottoming has been done, but at least a pullback move in the short term could be expected.
So that's the take coming in. As far as the market is concerned, Ruchit, are there any sectors that you're keeping then on your radar in terms of the kind of setup that is, it's still sort of shaping up to be? Are there any sectors that you're watching out for, at least for this year?
Yeah, I think if you look at the outperformance, in last 3 months when the markets have seen a very sharp correction, then one of the sector that one can clearly see it's pharma, where we witnessed a good consolidation, and post that consolidation, many of the pharma names such as Dr. Reddy, Lupin has been forming, even Sun Pharma have been forming high top, high bottom structure. So I think pharma would be one space where if one is looking to add some positions from a positional perspective, or one is looking for a sectoral outperformance over next few months, then this is one space where one can expect some good momentum.
The space to look at least when it comes to this year and the start of this year then. But Ruchit, do you have any picks for our viewers then?
Yes, couple of recommendations from a near-term perspective, not from the pharma space because that is more from a positional perspective that we are looking at. But couple of names that we expect positivity in the near term. One is Mahindra and Mahindra. Now, Mahindra and Mahindra is mainly because of the relative outperformance that it has shown within the auto space in these last 3 months. If you look at the auto sector from October to December, last 3 months, most of the stocks have corrected very sharply. A price-wise correction has been seen, but M&M has held on to its support, and we have not seen any kind of price-wise corrections over there. So there has been a relative outperformance compared to the other stocks within the sector during the corrective phase. And what we are witnessing now, post the monthly numbers that we have seen, now that the high top, high bottom structure could resume from here on. So Mahindra and Mahindra looks bullish here. One can go long with stop below 2970 for potential targets around 3250. And amongst the PSU basket, I think BEL is looking quite positive over here. So this is another defense name, which has not corrected much compared to the other stocks. Whenever there have been price up moves have been supported by good volumes, whereas we have not seen any volume-based selling in BEL in the recent past. So Bharat Electronics also positionally looks positive. The recent correction provides a good risk-reward ratio to create long positions here. So keeping a stock below 284, short-term traders can look buying opportunity here as well for potential target around 312.
Rather than a couple of picks there, thank you so much, Ruchit, for joining us. So, a couple of those picks that Ruchit highlighted for us, relative outperformance, poking up the outlook for M&M. On the other side, you do have the defense pack that is set to have a stellar year. But moving on, then the case for Indian equities continues to be compelling. And that's the word coming in from Nilesh Shah, MD and CEO at Envision Capital. Let's go across and listen into what else he then had to say about his outlook for this year then.
I think, firstly, what could continue to play out in 25 is domestic liquidity. That I think is going to be extremely important. It's going to be very, very crucial for our markets. And I continue to believe that clearly the case for Indian equities and for our domestic savers to become investors remains as compelling as what it was a year ago, 3 years ago, 5 years ago. I think that's something which is a long-term theme. The whole financialization of savings is something which will continue to play out, and therefore 25 will continue to be the same. Second, in terms of what will continue to play out will be essentially the government's focus on fiscal discipline. The path of fiscal consolidation will continue, which augurs very well for financial markets. What could be very different is maybe some of the large caps, which have honestly underperformed, for the last year or 2 years. Maybe there might just be a kind of a comeback, especially if FPIs and FIs stop selling and probably start to buy. For them, clearly, the large caps could be basically the low-hanging fruit. So that's something which could be very different from what we have seen over maybe the last year or so.
All right, then large caps are the low-hanging fruit, and that is the word coming in from Nilesh Shah. Time for a very quick breather on the show. When we come back, we'll get you more news and updates, so don't go anywhere. Welcome back. You're watching your trades on ET now. Time now to get you the derivatives roundup then. And when you take a look at the December expiry, in terms of the trend for Nifty, you're looking at a long build-up. In fact, when you take a look at the trend for Bank Nifty as well, you're taking a look at a short covering that was observed for the Bank Nifty as well. And when you take a look at India VIX, slightly cooled off towards the end of the session, but you did see quite the flip-flop coming in through the day, coming in for India VIX as well. So some volatility earlier, but slightly cooled off is what you're looking at in terms of the handover coming in from India VIX at the end of the trading day as well. When you take a look at active calls, you did have call buying that was observed at 23,800 levels and call unwinding that was also observed at 23,900 levels as well. When you take a look at the active put levels, put writing was observed at 23,700 and 23,600. So that largely is how the derivatives roundup then is shaping up to be like. But time now to get you the big story of the day, and that without doubt is an ET Now exclusive. We're learning from our sources that commercial property premiums will see a steep hike beginning today. Now, ET Now's Anurag Shah is joining us with those exclusive details. Anurag, over to you.
So, general insurance companies have withdrawn the deep discount they were giving on the commercial property insurance. So, in result, from 1st of January, the circular issued by companies, the internal circular which they have quoted to their client, which shows that the commercial property insurance has increased by 50 to 80%, and this steep increase is mainly due to the withdrawal of discount which insurance companies were giving after the de-tariffing of rates. So, in last year, the commercial property insurance rates were de-tariffied by regulator IRDA, and after that it was a complete free market. So, in competition, insurance companies were giving deep discount up to 80%, 90%, and after that, now the reinsurers has raised objection on that because their claim experience was getting bad, and after the objection of reinsurers, and now insurance companies have withdrawn the deep discounting, and now new rates are aligned with the IIB rates, which has increased the overall premium for commercial property insurance by 50 to 80%. Just a while back, I have spoken to a CFO of a company also. He has told me that for their renewal, the quote given by the insurance company has gone up by 400%. So, last year they have paid the premium of 10 crore, but this year the insurance company has given a quote of 40 crore. So, increase of 400% for their insurance of their company. Though property insurance consists of fire insurance, engineering insurance, which is taken by the corporate, that is the commercial line of segment for general insurance companies, and which consists of 10% of their overall business. The 3 lakh crore of industry, so around 30,000 crore of business is of property insurance, and after the withdrawal of discounts, new rates will be aligned to IIB rates, and in that return only premium has gone up by 80%.
Well, absolutely. Thanks, Anurag, for getting us those exclusive details. On the back of that, there were three counters that we were looking at that were buzzing away in trade: Go Digit Insurance, ICICI Lombard, as well as New India Assurance, buzzing away and going home with gains of anywhere between 1.5% to 3%. So those were the counters that we're talking about. But moving on, then the Union Cabinet today approved higher subsidy for DAP procurement. The additional subsidy will offset hike in international prices. In fact, we do have Prakash Priyadarshi who's standing by with the latest from the Cabinet meet then.
The Indian Cabinet meeting has concluded, and we are learning from our sources that the two important decisions have been taken. The first one is with regard to fertilizer sector. It has been decided to provide additional subsidy amount to the companies for the procurement of DAP. A very significant development coming in. As you are aware that the DAP prices have increased significantly in the international market for quite some time on back of multiple reasons, of course, due to disturbance on the routes and weakening of rupees against dollar. And therefore, companies have been requesting government to either allow them to increase prices in the domestic market or increase subsidy amount. Therefore, taking all these factors into account, the government has decided to increase subsidy amount in order to offset the hike in prices in the international market. Of course, this decision will benefit farmers as well as companies. We're given to understand that the government has decided to increase subsidy amount by rupees 150 to 200 per bag. Along with that, we also given to understand that the government has decided to extend PM Kisan Fasal Bima Yojana with some modalities where it has been decided to provide some relaxation to the farmers to get a maximum benefit of this scheme. Back to you.
Well, absolutely, Prakash. Thank you so much for getting us those important details. That was that all-important meeting and that announcement that had been anticipated about the subsidy for DAP as well. But moving on then, let's take a look at some of the counters that were buzzing away in trade today, the likes of Ireda as well as Tata Chemicals. Ireda, in fact, went home with gains of just about 3% coming in. In fact, Rabinder is standing by with a list of stocks that were buzzing away in trade. Rabinder, over to you.
Well, Tata Chemical is in focus, where HSBC has come out with a note on Tata Chemical, and they have maintained their reduced rating with target price of rupees 820. They says that the imposition of minimum import price to benefit in a limited way, and because of the oversupply risk, industry demand outlook remain muted. HSBC says that if the MIP is extended for a longer period of time, a broader sensitivity analysis suggests 5% higher volume growth in FY26. Moving to next, Ireda is also in focus, where company has announced its business update, and the company's loan sanction was up 129%, loan disbursement at 41%, and the loan book outstanding at the was 36%, at 69,000. Moving to next, Karur Vysya Bank is also in focus, where company has announced its business update, and the total deposit was up 15.75% year-on-year basis, and advances was up by 14% year-on-year basis. Apart from this, NCC is also in focus, where the company has received an order of almost 350 crore in December month. Apart from this, on back of order win, Kalpataru project is also in focus, where company and its subsidiary has received an order of rupees 1011 crore, and the YTD order inflow has exceeded 17,300 crore.
Well, absolutely. Thanks, Rabinder, for getting us that list of stocks that were buzzing away in trade. In fact, we did have L&T that was also buzzing away in trade, went home with gains of just about 1.6%. And on a related note, we did also speak to Sanjeev Singhal, who's the CMD at Mazagon Dock Shipbuilders, who shares his expectations from the budget then this time around. And he also expects major contracts for submarines in the financial year 25 as well as 26. On that note, let's go across and listen into what exactly he then had to say.
Yeah, as far as the budgets are concerned, we have observed that budgets have not been a constraint. Whatever the requirements have been there, particularly from the naval establishment, these requirements have been always funded by the government of India. So going ahead also, we don't expect any kind of a constraint with respect to the budgets because these requirements are sort of mandatory. So we are expecting one major contract in the form of 3 number of additional Scorpion submarines this year, which is likely to be finalized very soon. And in addition, we are also expecting a contract for 6 number of conventional submarines with AIP fitted and with lithium-ion batteries. So these 2 major contracts are there on the horizon, which we are confident that would be materializing within the next financial year. One within this financial year before 31st of March, that is the 3 additional Scorpion submarines, and the second one in the next financial year.
All right, and that was the word coming in from the management at Mazagon Dock. That entire space is going to be buzzing away in terms of the trading year then. But with that, completely out of time on this edition of Your Trades on 18 Hour from me, Shreyansi Singh, as well as the entire team that put this show together. Thank you so much for tuning in.